Are you wondering why you do invest in airlines stock if they are too cheap? Well, let me tell you that President Trump in October canceled talks for a second round of stimulus aid to the economy. However, he said loan markets should pass another $25 billion in aid for airlines. Airlines have cut flights, packed jets, borrowed money, tied billions in government aid to weather an historic crisis for the industry. Executives and analysts say that the industry recovery is likely at least 3 years away. Hi there, welcome to Investors Game. Today we're gonna talk about, should you buy airlines stock now? And give us a thumbs up, that helps us a lot, so let's get started. Now, it might be a great idea to be invested in the airline industry. Companies like United Airlines have been hit hard by the coronavirus pandemic. Major airlines burned through millions of dollars in cash, raised debt and equity to finance non-profitable operations, and failed to get the funding they needed from the federal government. But despite these setbacks, airlines have been still managed to pay their leases and met their debt obligations on time. As airlines fought to compete for the little business out there over the last few months, flight travel is also starting to pick up as cases decline. But airlines still face a lot of uncertainty on the speed of recovery process and the amount of time it will take to recover profit margins. This hasn't stopped industry analysts from speculating on the best stock to buy when travel sector comes back to life. Some stocks provide a great buying opportunity while prices are still low. But what airlines stock are the most common? Well, let me tell you that Delta, American Airlines, United, and Southwest control roughly 80% of the US airline business. Even though they control the 80% of the market, they have different types of costs. In the US, there are 3 types of airlines. There are the big networks carriers, Delta, American, and United. There are low-cost carriers like Southwest and JetBlue. Then, there are the ultra-low-cost carriers like Spirit Airlines. Theoretically, the airlines and arguably all businesses should put emphasis on maintaining enough cash to make it through less than profitable period, like the one we are now. One thing to pay attention is that due to COVID-19, a lot of airports have been closed. Some people are scared to travel, and all of these factors are affecting the airline's earnings. And to recover all the losses, it will take at least 3 years. And if airports keep being closed, this will delay even more the economy too. Airlines stock is not as volatile as other stocks as well. Now let's take a look at what sets these stocks from the other names that are struggling within the airline industry. First, Delta. Like many of its peers, the coronavirus pandemic dealt a hard blow to Delta Airlines. The price of Delta stock is down nearly 55% since the start of the year, and it's currently trading at just $33 per share. But despite a bleak industry outlook, the company fundamentals remain secure. Delta earnings took a hit as revenue declined from $47 billion in 2019 to just $1.2 billion in the past quarter. That was a big hit. But the company did everything in its power to improve its liquidity position. The airline decreased its daily cash burn rate from $100 million per day in March to just $27 million per day in June. It also entered a credit facility for $3 billion in March, and it once again for $6.5 billion later in the year. The company's abilities to raise debt to equity despite facing incriminating losses is a statement to the durability of Delta. Analysts also remain optimistic about the future of the company, and the analyst Daniel McKenzie expects that the airline stocks to trade at $50 in 2022 with earnings per share of $6. Remember, this is only speculation. Given Delta's size and strong liquidity position, it is likely that the company will be able to weather the COVID-19 storm and emerge from the crisis stronger than ever. Second, Southwest. In terms of reputation, Southwest Airlines hold the top position among its peers in the US. However, this doesn't mean that the company was immune to the effect of the COVID-19. In its second quarter, the airlines reported a loss of $2.67 per share and had an estimated cash burn rate of $23 billion, which is major cause for concern. However, this number has improved since then, and Southwest now expect a cash burn rate of just $17 million per day. This improvement was attributable to increase in air travel and the decrease in spending over the last few months. The airline's revenue efficiency has put the company in a great position against its US peers. In addition to its strong fundamentals, Southwest also has the ability to bounce back from the pandemic due to its loyal customer base. Despite the increase in air travel, Southwest has promised that it will only book 2/3 of the flight's capacity until October to abide by social distancing rules. This is an effort to prioritize customer safety, even if it means revenue has to take the back seat. Although Southwest has its drawbacks, the company's relatively strong balance sheet and loyal customer base could put this airline stock back on track when travel rebounds. Also, it will be a solid stock to pick up while prices remain low. Next, Alaska Airlines apparently controls 50% of the markets in Seattle. One of the Alaska Airlines' key advantage is its dominant position is in Pacific Northwest. Their airline is worth nothing that companies like Amazon and Starbucks are headquartered in this region. This means that when it's safe to travel again, corporate travel in the region will see a major uptick. While there's no denying the power that the big four airlines in the US hold, it's also worth looking at the smaller airlines stock as travel makes a comeback. Alaska Airlines is a company that always flew under the radar, but its strong fundamentals made this airline's stock a winner in a volatile industry. Another growth driver for Alaska Airlines is its recent partnership with American Airlines, which includes the exchange of flights and mileage rewards. This is expected to increase revenue in the coming months. Alaska is also expected to join the One World Alliance at the end of 2020. And the company can leverage revenue from the key hubs to accelerate its path to recovery. Now let's take a look at the chart of each one of these stocks. Alright, here we got Delta stock, and we're gonna use a weekly candle so we can have a better picture of what's going on in the market. And we're gonna use the method supply and demand so we can identify if the market is overvalued or it's undervalued. You will remember every market comes with supply and demand. And I want to clear one thing that people do is a big mistake is that they look at the highest price that we can see right here and the current price. And then they base their returns on the difference between the highest price and the current price. This is a common mistake because we can measure the returns like that. We have to see the balance sheet, if the company is going up, if the cash flow that they have is really good, and so much other things, because the company can go bankruptcy and will never reach this price. For that reason, just keep it simple and please don't do that. So what we're gonna do is just a pre-analysis and identify if we can buy this or sell this stock. Now we're gonna see the lowest price because it's interesting. This zone is where the smart investors invest their money. So if the market comes down at this price, it will be a good option to buy at this point. So for example, this stock is really good option to buy if the price goes at least at $72 per share. Or the lowest price that I will buy this, it will be at $17 per share. That will be really weird to happen. But remember, this is only for long-term returns. This is just long-term returns. So what happened with people that just want short-term returns? So we can see this zone that it's over here and the price tried to go even more up. But the price will never reach the sun. Why? Because we got a supply zone that is affecting this price. This is a demand zone. This is our supply zone. Also, we can see something that we got a triangle right here, and we can see. And what's happening in this chart? Well, because the market is in triangle, we can't move and we can't buy or sell this stock right now because it's not clear. That's nothing for me. If I would have $1,000 to invest in airlines stock, I would invest right now. Because it's not an attractive price for me. It's $33. It's overpriced because this means that the price is expensive. So I would like to invest or buy this stock at this point, and I would like to sell for short-term returns at this price. Just for short-term returns. Remember, we have to focus just in long-term returns because that's the key in investing. We can't expect be profitable investing in short-term because that's not the point. All right. The next stock that we're going to check is going to be Southwest Airlines, and we're going to check a weekly candle so we have a better picture. And here is something interesting that we're going to say the same thing. We're going to mark the lowest price and the highest price. So first, we can see that the lowest, it was at $22 until $26 per share. So this is a really good price, and we have a trend line saying that the market is going up. Now that we got a trend, we can see that also we have a demand zone right here that is affecting the market. So this one is really interesting. We can see that the market already hit 1, 2, and 3 times. So it's probably that the market could even go up and then down until this zone that is really good to buy, and then go even more up. So maybe the best option will be to buy in the middle, because we see that the market already has a trend. So the best option is to follow the trend, don't go against the trend. So in the middle always is a good option to buy, because if the market already has a trend, already has orientation. So the price, it doesn't seem to be really expensive in the middle, because the company has a good balance sheet, has a good cash flow, and the company looks like have futures plan to be a long term. So if I will buy this stock, it will be just in the middle or even lower, but now at this point, because it's not attractive price for me. If you like this video, don't forget to hit the like button. Let me know in the comment box, would you invest in any of these airlines stocks? Subscribe to my channel, because every week I'm in YouTube with new content, and do not forget to activate the bell so you don't miss any of our videos. See you next time.